Hello friends, how are you? In today's video, I brought to you the fundamental analysis of your favorite company. I've got a lot of requests to make a case study on this one, and here it goes. It's Amber Enterprises. Before we begin, if you have not subscribed to my channel, please do subscribe and consider joining, and you can also join my Telegram channel as well. So let's get started. So Amber Enterprises started its operations in 1992, and it's a one-stop solution for almost all types of air conditioners. They do right from the design till the making of the product and also testing. So it's a single stop solution where you can get, or any company can get, a complete air conditioner manufactured in their own brand name. So they are into designing and as well as manufacturing of air conditioners. So original equipment manufacturers or original design manufacturers come to Amber Enterprises, they get the products made and they affix their brand name on that product and sell it into the market. They are quite well diversified in the air conditioning segment, and they also cater to railways, metros, defense, bus systems, and also commercial segment. This is other than the household air conditioners which you and me use on a daily basis. They have 15 manufacturing facilities in 6 states in India. So let's discuss about the promoters. The chairman and CEO of this company is Mr. Jasbir Singh, who has extensive experience in this manufacturing of room air conditioners. He has more than 15 years experience in this field. He's an MBA from University of Hull, UK. He has established 7 factories under his leadership in the last 10 years. So you can imagine how fast he is growing the company. He has been awarded by an award called Man of Appliances by Consumer Electronics Appliances Manufacturers Association. The next person in the promoters is Mr. Daljit Singh, who is the managing director of the company. He's masters in IT from Rochester Institute of Technology. He has more than 10 years experience in RAC manufacturing, and he has worked in the past with Morgan Stanley. Let's discuss some of the milestones of this company. In 1992, they established their first factory at Rajpura. In 2001 and 2, they started manufacturing RACs. In 3 and 4, they started their Dehradun plant for RACs. In 2004, the Dehradun Unit 4 was established for manufacturing components of air conditioners and other appliances. In 2008, they started their Noida Ecotech unit. In 2009, the Dehradun factory unit 5 was commenced. In 2010, they started the Kasna unit, Kalam unit, and also the Pune unit. In 2010, again, the Dehradun factory unit number 6 was established. In 2012, they started their Jhajjar unit. In 2012, again, they acquired a company called PICL. In 2013 to 16, this period, they have focused extensively in the product range expansion in original design manufacturing category. Now let's understand the business model of this company. This company is into manufacturing of air conditioners, also the components of air conditioners and other appliances. They are into domestic sales as well as export sales. They cater to households as well as commercial usage segments. They are into original equipment manufacturing and original design manufacturing, wherein other brands come to them and get their products made on an outsourcing business model. So let's discuss the different product segments of this company. Room air conditioners is the main product segment which contributes to 61% of their revenue. Then roof mounted air conditioners for mainline coaches. These are for buses and trains. Then electronics and refrigeration solutions for railways. So along with air conditioners, they also are into refrigeration solutions for the railways. They are into roof mounted loco driver's cab air conditioners. This is specially for the driver's cabin of the vehicle. And they are also into defense related products, where HVAC products are supplied to the defense segment. Now, who are the major customers of this company? Multinational companies like Amazon, Carrier Media, Daikin, Hitachi, LG, Panasonic, Samsung, Toshiba, Whirlpool. You can see almost all the big brands are their customers, which gives this company a very big advantage. In railways and metros category BEML, I've mentioned only few names in these categories. Railways and metros, BEML, China Railway Rolling Corporation, Delhi Metro Rail Corporation are their customers. In defense, Bharat Electronics Limited, Department of Telecom is their customer, and buses also they do OEMs for other companies. Now let's discuss the market in the industry of air conditioners. We'll discuss some trends about the industry, in which direction the industry is moving. This industry is more getting concentrated on the energy efficiency trend. A lot of urbanization is going on in the country, wherein people are moving to the cities and towns, where people now are developing more requirements of air conditioners. Compared to the other countries in the world, in India, the penetration level is just 7% to 9%. That means very few people in India are using air conditioners. So there is a huge opportunity and an untapped market. Vocal for local, which is Make in India movement by the government, gives this industry a lot of push so that the exports go down and indigenous manufacturing gets promoted. Lot of brands are outsourcing their manufacturing to these kind of companies like Amber. The per capita income of the people is rising, so people are able to afford to buy air conditioners. A lot of e-commerce orders are coming to these companies. People are selling air conditioners online and getting them manufactured through Amble and putting their brand name. The seasonality curve, normally air conditioners earlier were used only in summer season, but now the trend is changing, and almost all around the year people have started using air conditioners due to the weather conditions and their comfort requirements. So the seasonality business is going down, and across the year the sales are happening. Due to the COVID, increase in work from home culture has begun, so people are now installing more air conditioners at home because they are spending more time at home. And room air conditioners market size at present in India in 2020 is about 6.8 million units. Domestic, in this market, there are domestic players, international players, and also unorganized players which sell air conditioners. So these are broad three categories. The room air conditioners market is growing at a CAGR of about 13 to 15% on an average up to 2025, which is a very good growth rate. If you see from 2009 to 2019, in the last 10 years, the market size has grown from 2.8 million units to 6.8 million units, which is almost three times. And if we see further details, the split AC is constituting 86% of the market size, and the North India constitutes 35% and South 27%. By rating, if we see, 3-star categories is the highest sold, about 72%, and by capacity, 1.5 ton is the highest selling product. Who are the competitors? Listed competitors of this company are Voltas, Blue Star, and Johnson Control, Hitachi. What could be the competitive advantage of this company? This company has a very well established market position. It is well diversified into almost all the categories of air conditioners, and also components which are useful in appliances other than air conditioners also. They have non-air conditioner components verticals, as we discussed. The growth of this company is very consistent in the last 3 years. If you see, on an average, this revenue is growing at around 30%. The infrastructure developed by this company, which is about 15 factories, will give this company a lot of advantage over the other competitors. And they are also trying to do maximum backward integration so that they don't have to import things from abroad, and they manufacture even the raw materials or the other smaller spare parts in India itself. So they also offer a complete design to production solution, which we discussed earlier, that gives an advantage to this company. Now, what are the growth prospects of this company in the coming future? The growth is quite well maintained in spite of the COVID situation. In the first quarter of 2021, it was a bit hit by the COVID, but the demand is recovering quite fast now. As we have discussed, seasonality is reducing, so that is creating more and more demand all around the year. The component segment is also gaining a lot of momentum. As and when this company grows bigger and bigger, economies of scale will come in and their costs will reduce, which give them better margins. Make in India push is giving them a lot of advantage when it comes to home manufacturing. The government is levying custom duties on air conditioning imports. In fact, they have banned air conditioners, which gives this company a lot of advantage. Then new segments like commercial cooling is also growing rapidly fast, and this company is taking a lot of interest in that segment. Online players which are selling on Amazon, Flipkart and other websites are getting their air conditioners manufactured by this company, which is giving this company a lot of higher sales, and opportunities in the export markets are also tapped by this company. The demand is getting higher and higher due to the customer earning more and more better per capita income. There are a lot of financing options also not available now, where people, even if they are not able to afford one shot payment, they can finance and buy an air conditioner. The desire for more and more comfortable living in people is leading to higher purchase of air conditioners. Backward integration is done by this company, as we have discussed, and they are also doing certain acquisitions. In 2019, they acquired Sidwal Refrigeration Industries Private Limited to strengthen their base in the railways customer base and buses and metros. And they have expanded the Judger unit very recently to grow better in operations. They have acquired recent couple of years Ever Electronics Private Limited 51% stake and Sidwal Refrigeration 80% stake to strengthen the company and its product portfolio. What could be the risks which this company might face? The volatility in raw material prices could be a risk. Adoption of technology is very important because they have to be first in adoption of any kind of technology. The major revenue comes from the top 10 customers, which could be a risk wherein if they lose a couple of customers, the revenue might be drastically impacted. This still is considered to be a seasonal business where the sales are higher in a couple of months, and if something goes wrong like COVID in that particular season, then the maximum sales of that year will get impacted. Since they are into import and exports, the forex exchange risk also applies. The client's business model risk, if the client changes their business model and they prefer to make in-house instead of outsourcing to Amber, that could be a risk to this company. Operating efficiency has to be maintained very well, otherwise the margins will get drastically impacted because they operate with very thin margins. And competition risk is always there from multinational companies as well as Indian companies. Now there are some subsidiaries of this company. Wholly owned subsidiaries are PICL India Private Limited, Apps of Appliance Private Limited, and there are other companies which are not wholly owned subsidiaries but as investment companies. ILGIN Electronics India Private Limited, Ever Electronics Private Limited, Sidwal Refrigeration Industries Private Limited. Now coming to the financials part, after understanding the entire business of this company, Q1 FY 2021, the revenue went down drastically to 259 crores, which is about down 79% compared to Q1 FY19. Operating EBITDA loss was about 3 crores, so they could not make a profit in the Q1 quarter. Net loss of about 23 crores. Complete shutdown was the reason, because for almost 1.5 months was the reason of this underperformance. But the company is very positive and they feel that about 60 to 70% demand is already back immediately in the July month, and they are growing rapidly thereafter. Now, if you see the revenue of this company in the last 3 years, for 2018 it was 2128 crores and came up to 3963 crores in about 2020. So if you see on an average, it has grown in the last 3 years at about 30%, which is very good growth. Coming to the operating EBITDA, it's about 183 crores in 2018 to 326 crores in 2020, which is steadily growing. Profit after tax is also steadily growing like the revenue, and it is in financial year 2020, it's about 164 crores. They are continuously investing in the capital expenditure and growth of the business. And if you see in the recent year, they have invested about 108 crores in capex. Let's understand the shareholding pattern as on September 30, 2020. The promoters holding went down to 40.3%, which is not so good news. FII is about 25.4, DII is 27.5, and other shareholders, non-institutional shareholders, is about 6.8%. So this is how is the shareholding of this company. So promoters holding, I feel it is a bit low. Financial highlights: EPS is about 50 rupees in financial year 2020, which is up 66% from financial year 19. The equity of this company is consistently maintained. Debt equity ratio is 0.28, which is pretty reasonable in spite of so much growth. There are no pledged shares. The reserves are fast growing, and as we discussed, tangible assets have increased to 747 from 651. So they are investing in the plant and machinery for growth. Cash balance is about 120 crores, which shows that this company doesn't have any problem of cash. Free cash flows about 143 crores in FY20. Remuneration to executive directors is about 5 crores. In terms of units, they have manufactured 3 million units in financial year 20 compared to 2.1. So there is a drastic increase in terms of volumes also. Profit before depreciation, interest and tax is about 8% margin, and net profit is about 4%. So as we've discussed in this business, the margins are quite less. So operational efficiency has to be maintained. Otherwise, the company would be in a problem. Return on equity, return on capital employed are about 14 to 16%, which is pretty reasonable for this kind of business, but not so attractive. Inventory turnover ratio is about 6x. They have been declaring dividends 2 times in the financial year 20 of about 1.6 rupees. Dividend yield is 0.14, which is very less because they are investing in the growth of the company. Auditors of this company are Walker, Chandiok and Company LLP. Now coming to the valuations part, last traded price is about 2332. 52-week high and low is 920 to 544. In the last 1 year, the stock has given returns about 135%, and 5 years it's about 87%. Market cap is 7860, so it's a mid cap stock, and PE I have taken on the basis of earning per share of financial year 20, which is 50 rupees, because in the recent quarter the performance was very bad, so PE has shot up drastically high. So if we take financial year 20 EPS, PE is about 46, industry PE is around 43, earning per share is about 15, which is trailing after the recent quarter result, and price book ratio is about 7.26, which is slightly on the expensive side. Intrinsic value as per Graham's formula comes to around 1300 rupees for me. And if we see the support levels, I feel you can go for a first investment in the stock if you wish to, in the range of about 1400 to 1600. And then the support the stock gets is about 1000 levels. Recent news, the custom duties have been increased on air conditioners. In fact, the air conditioners are being banned by the DGFT, which is Director General of Foreign Trade, which gives this company a lot of advantage in terms of manufacturing in India. And government is also introducing PLI, production linked investment scheme, wherein people manufacturing air conditioners in India will get advantage and subsidies, which is a big advantage for this company. So this is about Amber Enterprises. To conclude, this company has good fundamentals, and margins in this business are slightly less, and that's why returns are less. In terms of performance, it has a consistent track record of growth, and the government is giving a lot of support to this sector. The market size is tremendously growing, and as the company grows, it will get a lot of economies of scale. It can grow faster because it's acquiring a lot of small companies on the way. And one concern is that the promoter's holding is reduced, and there could be serious risk because this field I feel is very competitive. So the performance has to be maintained, the quality has to be maintained. This company does OEMs for the other companies, so they don't have any brand advantage as such. In terms of valuation, I feel the stock is a little expensive, so you should wait for the right level to enter if you feel this stock suits your portfolio. So that's about Amber Enterprises. I hope you like the video and the analysis. Thank you for watching this video. Join my channel and subscribe to it. Hit the bell icon and feel free to join the Telegram channel as well. What is your view about this company? Please leave in the comments below. And if you want me to make videos analysis on your favorite stocks, don't forget to leave the name of that stock in the comments. And thanks for watching and have a great day.